Hello and welcome to the Cybrgen Compliance Talks podcast, the podcast where we speak to leaders from across the technology and compliance space to help reframe the conversation and narrative around compliance, from compliance as a checkbox to compliance as a growth enabler. My name is David Loader and I head up growth here at Cybrgen, and I am your host. Today, I am joined by Shannon Krishna, who is the head of compliance at Incard. Shannon, welcome to the show.
Thanks, David. I am Shannon Krishna. I'm the head of compliance and UK MLRO at Incard. I have worked across sort of traditional banking and high growth fintechs, from sort of the cooperative bank in New Zealand right through to UK firms, WorldRemit, Luno, Volume. So all fintechs as soon as I landed in the UK. In terms of high level spec on my view on regulations and things like that, I would say that what's shaped it is having seen what works well and what doesn't work quite so well at different scales through to banking, from banking through to fintechs. At Incard, currently where I'm based, the focus has been designing compliance as infrastructure, I would say, not as a bolt-on.
Well, I look forward to kind of diving in a little bit more into the particular kind of intricacies and seeing kind of the lessons you've learned from your various journeys for organizations at all sizes. But I think before we kind of get stuck into that, I'd love to kind of take back to our previous conversation when we spoke about that kind of serendipitous moment that you ended up getting into the world of compliance. So would you be able to kind of talk to tell the listeners a little bit about your journey into the compliance world?
Yeah, absolutely. I think just like most compliance peers I've got, we will all tell you that it wasn't an intentional career choice at the time that we chanced upon it. So my background, I've been around sort of compliance and risk for the better part of about 15 years or so. And that started back at my uni days. So I was studying towards a degree for biomedical sciences, and I needed a part-time job. And that was at ANZ Bank at the time, one of the big four banks in New Zealand, across sort of Asia Pacific. And I was a debt collector, so didn't quite fancy that role in particular. Apologies to my team leader if she's listening right now. As an 18-year-old, you don't quite fancy having someone on the phone sort of telling you they're not willing to pay their debt in not so polite ways. So AML-CTF came around as a regulation in New Zealand at the time, and the bank needed to comply, and they requested for sort of a bunch of volunteers who could take on that responsibility. And I was quite keen to move on from my role at the time. So I put my hand up, and one thing turned to another. Went from an analyst at ANZ through to getting a team lead role relatively quickly, because I quite enjoyed the sort of data analytics side of things and customer onboarding and all of that. And then I started doing a bit of training and joined sort of further banks as it progressed, and then decided to effectively ditch my ambition for the biomedical sciences. Apologies again to mum and dad, and continued with compliance. So I've been sort of at banks within Australia and New Zealand, and then from then on became sort of head of compliance, and then head of APAC, and then now global. So
Well, thank you for providing that context. And I think so. It sounds like there's that kind of regulatory wave that kind of like swept in and you were kind of riding that wave. So I'm going to ride this out for as long as possible. But so it sounds like that's what really kind of got you into the industry. And you mentioned some of the kind of the big banks and some of the heavily regulated environments you worked across the APAC region. What was it then? And what was the kind of the turning point from working at these larger organizations across the APAC region that led you then to think, I'm going to move to London, and then start working at the kind of the earlier stage startups?
Sure. So I think banking really I would say that one of the positives of starting from banking is that it taught me a lot of discipline and consequences, right? So there were policies, there were controls in place, they had resourcing, and frankly speaking, I was able to go in and take a look at what works and what doesn't work. If you compare that to fintechs, from there I've learned speed, what ambiguity looks like, and what decision making looks like without perfect perfect data. So both very different ballparks. When I was in banking in New Zealand, I was climbing up the ranks relatively quickly because I was young, I was a quick learner, and I really enjoyed working with my team over there. However, I had a thirst to sort of keep going, and I wanted to go global. So it wasn't enough for me to just stick around within Asia Pacific. And my boss at the time, we were having conversations, and he knew that I was avid to travel. I used to try and travel wherever I could. If you have been to New Zealand, you would know that it would be a shame not to travel around sort of Australia, New Zealand. So I did a bit of that, and then I said to my boss, look, I would really like a bit more exposure, career growth wise. I'm ready to move. UK, London seems to be a great hub for sort of fintechs, and that is something that's very exciting to me. I've done the banking part. I understand the basics very well. I can lead a team. I can create policies from scratch. I am now looking to sort of, I guess, add more risk to my own portfolio. So I was talking to my boss at the time. There were, unfortunately, sort of, I couldn't carry on with them in the UK. But whilst we were having a conversation, I did have a sideline conversation with another person I had worked with previously, and it was for an opportunity in a crypto firm. And that was sort of, we're talking risk. Crypto is probably, it was the highest sort of fintech space, highest risk fintech space you could get into as an MLRO because it wasn't sort of regulated at the time. So this was a firm that was trying to get through licensing, and I said, sure, why not? We'll give it a crack. And somehow went through all of the interview processes successfully. I think I got along with the team well and understood what they were trying to gain. And then as soon as I landed in the UK, there was a lot of exposure, not just with crypto, but just in terms of the higher risk geographies that, for example, the likes of firms in New Zealand and Australia would be sheltered from because we just simply wouldn't have the controls in place to be able to handle the bigger players. So yeah, high risk jurisdictions, high risk customer types, high risk industries, all of those came into my bucket, from sort of adults to gaming to sort of open banking to crypto to remittance. And it's been awesome. It's been a great ride. I think, as you mentioned, compliance, regulation, these are enablers, right? So I don't see regulation and growth as opposites. I think good compliance is what makes growth sustainable. And everyone in the London sort of fintech space is looking for sustainable growth. So I've had some amazing opportunities since being here. And I think serving higher risk SMEs is my favorite part of the role, because I would say that most of these customers aren't reckless. They just don't fit our legacy models. Banks aren't wrong. They're just constrained. Fintechs can look at behaviors and context rather than sort of just labels alone. And I would say that for me, risk isn't binary, but it does need to be actively managed. So those are a few things that align a little bit better for me in the fintech space compared to sort of the banking space. So I think for the foreseeable, I will be sticking around in the industry I'm in.
So it sounds like the agility coupled with kind of the speed and the rate of change is something that's much more kind of aligned with you and your kind of capacity as a head of compliance, which is why the fintech startup scene's much more favorable for this stage of your development than those bigger kind of banking institutions.
Absolutely. I mean, if you ask anyone in my personal life, I'm a big sucker for stability, but quite the opposite when it comes to my career, because I think banks have got the depth and the stability, whilst fintechs have got sort of the flexibility and the tooling. And I think the issue is whether the risk framework actually fits the business model. So I think problems happen when speed kind of outruns governance, or legacy approaches get sort of copied without thought. So I think a lot of banking issues, from what I've seen or spoken with peers about, that's where the issues lie, because we are still stuck in that legacy phase. Whereas you will see fintechs pick up pace when it comes to tech, when it comes to AI, when it comes to automation, and run with it. It's just that we need the right sort of senior leaders in compliance and risk and legal to be involved with those fintechs to help sort of empower that growth in a sustainable way.
So zooming in on that for a second, because I think it's It's such an interesting point that you talk about kind of being in fintechs, this fast moving, fast adapting, high growth sort of environment. So you need kind of compliance. We spoke about compliance being a growth enabler, but you really need to balance kind of compliance and innovation. Talk about how, you've kind of enabled that at the fintechs you've been working at.
Sure. So I think the big thing for me is leadership in hyper growth situations, which is, a fintech. So growth creates pressure, of course, to decide quickly, and oftentimes there'll be incomplete information. And whilst we've been speaking about growth for the past 10 minutes, I will say that sometimes leadership, especially compliance leadership, means slowing things down deliberately. And that's obviously that's not popular. I'm often not the most popular person at my job, at my company, sorry, but it protects the business long term. So what I do when I go into a firm is to try and understand the leadership there. If the goal is the same, sort of the company growth, you believe in the values of the company and you believe in sustainable growth, that's when half my battle's already won, because I know then that when I go to my CEO and say compliance cannot sit at the end of the process just as a tick box, he will then say to me, okay, make sure, to the product team, make sure Shannon's involved from the get-go in terms of the new product that we're looking to build. If we show up at the sign-off stage, it's already too late for compliance to be able to effective in our role, which is often times what I've seen with sort of more legacy models, right? So it comes down to the team. It comes down to you as a senior compliance professional to be able to be seen as someone who can have a conversation and not just say no. So the big thing with fintechs is that the CEOs, the COOs, everyone is a risk taker. Everyone's looking to try and grow the business in a sustainable way, pick out a gap in the market. And normally when there's a gap in the market, there's risk involved with that. So what they need is a compliance officer who can come to them and say, this is the regulation, these are the risks to the business, this is what we can and cannot sort of accomplish given the resources and the controls we've got. If you want to go down a different path, this is what it will look like. These are your risks. This is how much investment we'll need to put into risk and compliance to be able to effectively monitor all of that. So for me, the biggest thing has been, will I be able to talk to my C-suite? Will they be able to listen to me in terms of what message I've got to deliver? Because 9 times out of 10, that message won't be an easy yes. Yep, let's go and sort of serve people in Sudan. That's not going to happen, right? But I'll be able to say to you, this is why we are not able to serve that jurisdiction. This is what we can do. These are alternatives. So I'm sort of the type of compliance officer you can come to and say, I would like to do this. And I'll say, fantastic, appreciate that you're so enthusiastic about that. Let me take it away and come back to you. And when I do come back to you, I'll come back with solutions, not just a yes or no. So I think that's what works well with fintechs. And oftentimes, sadly, because being the head and then global head in roles in my career, I've seen and interviewed other heads of compliances for specific roles where they come to you and say, Shannon, obviously one of the questions I'll ask is what's motivated you to move on from your current role? And oftentimes you'll hear the answer, my leadership doesn't listen to me. So I'm not gonna stick around somewhere I'm not valued or somewhere, I'm not willing to take the risk of the business upon my shoulders, having spoken to my executive team several times, but being sort of overlooked. So I think that's the key thing. It depends as a compliance officer how you approach the subject, but it's also important to have a team of leaders backing you because they're not just ticking a box having a head of compliance. They're there to say, Shannon's going to fit in at this point in our team, and this is the value she's adding to our team, which is Incard's been great for that. I can't speak highly enough of my exec team there, especially sort of the COO who I work very closely with. He was leading the compliance function before I even got there. And normally when I join a firm, I'm quite skeptical to see all the policies, knowing that I'll have a big task of uprooting all of the policies and redoing them. But this was one of the very few firms where I went in and the policies and procedures and the risk frameworks had a very sort of solid background. And when I spoke to the individuals, especially in the leadership team, they had a very clear idea of what compliance and risk already looked like, which was fantastic. So, yeah.
You mentioned a number of the people you've been kind of interviewing as head of compliance. I think you touched on a really interesting point. They say, my leadership doesn't listen to me. And I think a lot of it's probably in the way they kind of frame this compliance conversation, which, as we mentioned, is the whole idea of the podcast of how do we reframe the conversation as it being a growth enabler rather than a hindrance. So I guess with that being said, and from your experience interviewing these people, what would your kind of like one piece of advice be to these kind of heads of compliance that find that they're constantly butting heads with their leadership, who don't understand that they're not trying to slam on the brakes at every opportunity? They're not trying to be the person that just says no. What would your advice be to those sort of people as to how they should be reframing the conversation to get this executive, buy-in from the leadership teams?
I would say, thanks, David. I think, first of all, I think sometimes it can be a little bit risky labeling compliance as a growth enabler entirely on its own, because it can often be misunderstood. I think compliance shouldn't be built to drive growth. Again, it's about sustainability, right? So it should be built to support good decision making, and the good decision making comes from the top down. And when compliance is embedded early and properly resourced, it reduces the friction, regulatory friction later on, reduces the rework. And this is where most sort of people, most peers I've got, that's where they struggle, right? There's less resourcing available, less headcount, and a lot of commercial pressure. So I think if you are a good if you want to get out of the rut of having the same conversation, the same outcomes with the leadership team, because commercial pressure is winning these conversations, it's just a matter of fact about being clear. So we need to be clear that we understand the commercial goals, and we're here to challenge things more effectively. So I think what really matters is a very clear risk appetite. You go to your leadership team and say, what are our values? So if you're joining a firm, it's very important, especially a fintech, which is a sort of rapid growth environment. You understand what they're trying to build, you understand their customer base, and you actually align with that. It needs to be a role that you're passionate about, because once you understand what the company's trying to do, then the conversations become slightly easy. And the one thing I would say is, you go to your CEO or your leadership or your head of product, whoever it is, and they're saying, we need to do X, Y, Z. That's when you can go in and say, I think that would be, from a commercial standpoint, I get your point, and I see how this would benefit the business. These are the things that we can consider. Let's work together and seeing what we can do to achieve that goal. And just for the record, here's some research I've done on the topic, and these are some other options available to us if we decide not to go with option A, given if the business decides it's too risky. So the first thing is just to take a step back. If someone wants to have a conversation with you about a product or a service or a high-risk jurisdiction, and you know that that's going to be a difficult conversation to have, you are very much allowed to say, let me get back to you as soon as possible. You go away, you do your research. No one likes someone going in immediately saying, no, sorry, we cannot do this because this is the regulatory guidance, section C, blah, blah, blah. The business is not going to read the policy. It is your job to read the policy, understand the policy, at the same time understand your business's needs, what resources it's got available, and what you can do. So there's a reason why a head of compliance has a direct role, or it should have a direct reporting line into the board, right? So you are there, you understand exactly what the conversations are around the board, you influence, or you provide insight to the board on what the risks look like. Therefore, you should have enough information on what the business is doing, what it plans to do, and what its sort of limitations are, to be able to say, let me step back, and I'll come back to you with sort of factual information about what we can and cannot do. So, yeah. And I've said no to people before as well. Like I said, compliance people sometimes in a very high growth, fast-paced environment, they are there to slow things down. I have slowed things down when, for example, we were in one of the firms I worked at, we were trying to apply for a license, but we didn't have the correct investments. We weren't able to correctly invest in the controls that were required at the time. So I had some conversations where I wasn't the most popular candidate, but given how you put it, the message does get relayed to the board, where they're like, okay, if we take this into consideration, maybe there is a point in slowing down in area B and looking at another alternative. Again, you look at other avenues that can continue the business, propel the business forward. It doesn't mean that the business comes to a complete halt. So, yeah.
So it sounds like in large part there's that kind of education piece, and whether that needs to be driven from a head of compliance or needs to come from, the C-suite, that understanding compliance within the context of business outcomes and business enablement, it seems in your mind as a sales team, as a engineering team, whatever it is, that developing this new product or bringing on this new client it represents something fantastic for the business, a new product, new revenue stream, whereas actually this is the risk it exposes us to, and that far outweighs any sort of potential upsides.
Absolutely. And I think it's about being transparent, right? I worked with one CEO in my career where we were looking at a particular sort of customer type, which is quite high risk. And he said, look, Shannon, this customer can get me 200K per year. And how likely is it that I'm able to onboard this customer? And we had a chat, and I said, look, this is the customer profile. These are my concerns. He said, this is the customer I want to onboard. I said, great, let me do enhanced due diligence. I'll come back to you with the findings and we can have a further chat. So obviously, high revenue generating customer. So this was top priority for me. Did the due diligence, came back and I said, these are the red flags associated with this customer. Appreciate there'll be 200K generated. This is the regulatory fine you can get penalized with, which can, offset that by 10 times over. So let's have a very clear think about how we can manage to onboard this customer. And later on, the outcome of that sort of discussion, which went on for weeks, by the way, was decided that the company was sort of at a very early stage to onboard that customer. We did not have the correct controls in place, things like the right transaction monitoring tools and things, just in case, given the customer profile, if something did go south, the firm would not be able to recoup sort of the regulatory risks associated with that customer.
That's a nice kind of segue into your role is very dependent on the kind of the risk appetite of the leadership team of the kind of the board you're working with. You can provide the evidence, but ultimately it's up to the CEO and the board whether they want to take on that risk and take that chance or not.
Absolutely, absolutely. So even at Incard, right, we were talking about the UK license, which we recently obtained at the end of 2025. And when I was onboarded, I've been there just under a year now at Incard, and we were discussing sort of the growth journey. Which jurisdictions do we want to go into? Of course, the board had a clear idea that they wanted to get licensing in the UK, and then they were sort of open to discussions around Europe, around US, things like that. It does depend on the vision of the board, of the sort of key driver of that business, where they see the gap. Because at the end of the day, the business needs to reach a certain growth level, whether it's X amount of customers they'd like to obtain by the end of 2025, 26, X amount of revenue, X licenses, X, whatever it is. So it is up to the executive team to decide what that looks like, with input from compliance, of course. And then the compliance person comes in and says, okay, incredible. These are the absolute no's in terms of, for example, prohibited countries that we absolutely cannot transact with. And that is not something that we can negotiate. That is just prohibited according to UK law. If we're going to be licensed here, we need to abide by certain laws and regulations. So this is what they look like. So it's very important for the team to have that information going in, so they know, okay, based on this can then shape what our risk appetite needs to include. And then the compliance officer can take a lead and say, right, based on this, the product or the service or the new feature that we're looking to offer, that there's no risk posed, we can go ahead with that. Or if this is in the gray area, let's have a further conversation. But it's very important for your leaders to have some sort of basic knowledge that just because you've got a fintech that you are trying to make into a success story, it's not going to be a straightforward process, right? It's not going to be like, right, I'm going to target the first 10 customers who can give me 10 million per year. That's that's not going to be a very likely scenario. So you need to have a good head on the shoulders of your CEO. And a lot of people look at, for example, training as a tick box exercise. I think the FCA in the UK have made it sort of very, very clear that the training for senior leadership needs to be slightly different from training in different lines of defense, first, second line, the rest of the company. And there's a reason for that. It's because the senior leadership team are making some very serious decisions on a day-to-day basis, on a quarterly basis, whatever the case is. So they need to have a little bit more knowledge on certain risk factors that the rest of the business, frankly, won't care about or won't understand. But as your CEO, as your COO, they are expected to run the company in a sort of in a legal manner, in a compliant manner, and the burden of compliance isn't on the head of compliance. It's on the entire company, right? It needs to be from the top down again, and the top isn't the head of compliance. The top is the CEO. The top is the board. So it needs to filter down from there. And that's why, I think giving them enough knowledge on what the regulators need is the first part of it, but the biggest part of that is having a solid enough sort of C-suite team who are willing to learn, who are willing to understand the jurisdiction that they're operating in and what the requirements are and why they've got a Shannon at their firm. It's not just, okay, we need to fork out X amount a year for a compliance officer. So why am I forking this money out to a head of compliance? There's got to be some benefit. Yeah.
You mentioned the grey area, so I'd love to kind of zoom in specifically and talk about kind of what you enable and how kind of fintechs such as Incard can really, flourish in this sort of grey area by taking on customers that would maybe be deemed kind of too risky by larger organizations. Could you talk and expand a little bit on that?
Yeah, absolutely. So I think, first of all, this is not me saying all fintech should serve higher risk customers. That's not the case, and
that's not financial advice.
Not financial advice whatsoever. I think serving higher risk customers isn't sort of a value judgment; it's an operational capability, right? If you don't have the controls and the expertise, you shouldn't be doing it. Period. No matter if you're a bank or a fintech. I think, again, going back to what I had said, sort of banks have got the depth and stability, but what fintechs have got is flexibility, and they're willing to look at tooling and whether the risk framework fits the business model. I think so. If we talk about Incard specifically, we are targeting smaller businesses with 1 to 2 UBOs maximum, right? So, and there's a big group of people who fit into that category, especially post-COVID, because a lot of businesses started up online, a lot of drop shipping, a lot of younger entrepreneurs came on board who were just sat at home, not able to do their daily job, and decided, you know what, I've got the intelligence, I've got the experience, or I've got the knowledge, and I've got the passion about a certain product that I would like to launch, or I would like to get into this industry. Let me figure out why. Now, but when they went to a bank, because Incard's not normally the first choice for these people, especially in the previous years when we were new. Obviously, with anyone, you'd go to a bank first, right? Banks are seen as stable, as strong, with great controls in place. So, for example, David, if you went into a bank and said, I need accounts, I've just started a business a month ago, there is a very high likelihood you may be turned around and said, sorry, we cannot offer you a credit card with X amount of limit, or an account with X amount of whatever facilities that you need. And the simple reason is you don't have the risk profile, or you're deemed as too high a risk. Why? Not because your name's David. It's because you don't have a big enough credit risk history. You don't have the capabilities to sort of handle refunds or complaints and things like that. And those are seen as risky parts, because the regulator will come and say, what happens to how does your customer handle customer refunds? So where does the money go to? I won't get into the details of all of that, but effectively a fintech like Incard can come in and say, okay, these are the reasons why these customers are not being able to be served by a bank. We can offer these products and these features. We can offer them a credit card. We can offer them a bank account. What do we need to do in terms of a reg compliance standpoint? Is it realistic that we can do this in a way that doesn't compromise on regulatory or compliance requirements? And the answer is yes. First of all, you go and find a good compliance person with the right relevant expertise in a sort of higher risk area, and they can come to you and say, look, this is doable, but you have got to be willing to invest in the right tools, in the right controls, in the right manpower resourcing, so that we don't compromise on compliance, and at the same time we don't compromise on the customer support that you'll be providing to your own clients as well. A lot of the times you'll see transaction monitoring, for example, is one of the biggest controls that we've got in place, right? From a AML, fraud, terrorism financing, all of those. From that standpoint, that's one of the biggest controls we can have in a payment services firm. So a lot of the times, customer transactions can be delayed because of those controls in place. But when you go to the likes of a firm where the controls are put in correctly, the processes are in place, and you understand what the customer needs are, you will already have a background on what your customer does, where they live, what they do, what customer types they serve, what their website looks like, what kind of product they serve. So if something alerts on your control, you'll be able to look at it and say, this is normal activity for David. It may not be normal activity for Shannon, but this is normal activity for David because he's buying 1,000 pens because he supplies. Like if Shannon's buying 1,000 pens and she works at a bakery, you'll be asking questions, right? But if David's selling pens, you won't ask a question. So it's as simple as that. Unfortunately, a lot of the bigger banks have not sort of segregated or have focused in on, who buys pens and who works at a bakery and who does this and who does that, because for whatever reason, each risk appetite to their own. But if Incard comes in and is like, we're only going to focus on people who buy pens, then they have an understanding of people. And by the way, this is not an actual customer. I don't think we have one anyway. But we'll be able to hone in on what your requirements are to be able to sell those pens to your own customers, as well as buy those pens for yourself for sort of wholesale, things like that. So it depends on the fintech completely understanding who their target market is. And if they're wanting to take the risk with their target market, if you've got the right controls again, it doesn't stop you from filing SARs. It doesn't stop you from monitoring alerts. It doesn't stop you from holding transactions that you feel require further information that make you uncomfortable as a sort of senior compliance person. You don't just ignore all of that. Those are all still in place. Whatever procedures the banks have in place for due diligence, fintechs have that, and sometimes even more, right? Because they're serving such high-risk customers. So it's just a matter of resourcing the right frame of mind, the right sort of value system, and the right people in place.
So it sounds like really kind of the smaller fintechs really are kind of playing a different game to some of the kind of the larger banks, whereby they're wanting the kind of less risky, they've got their more kind of legacy approaches to stuff. And even if we kind of look at COVID and we look at recent changes in the kind of the workforce and stuff, maybe these kind of old approaches, it's stood the test of time, but there's more businesses, more kind of small one man or few people kind of businesses cropping up that actually aren't being served by these big banks, which has kind of made plenty of space for the likes of Incard that can have more adaptable, kind of agile, nuanced approaches to really kind of hoover up and kind of serve those portions of the markets which otherwise would be kind of left behind.
Absolutely. And interesting you say that though, David, because a lot of these banks are now segueing into these higher risk industries. You will see banks talking about crypto offerings. You will see banks talking about open banking. All of these industry types, which the banks sort of in the best part of the last 10 years were very reluctant to onboard as customers of their own. So if you owned a crypto firm, you needed to have a banking partner in order to have accounts, right, for certain reasons. And if you did open banking, you need a sort of payment services partner. And oftentimes in the last 10 years or so, banks would say, nope, too high. The risk is too high. We cannot onboard this. Let's go with trust. So nowadays you'll see banks talking about, or advertising rather, that, hey, we now offer sort of cryptocurrency services in XYZ jurisdictions. We now offer open banking, things like that. So I think banks are also trying to step up and go ahead with the times now, because the fintechs are posing to be a competitive player in the payment services market. So that's exciting for me to see. But I've been in a room, for example, working with one of the higher risk industries, where the regulators were on one side. I was the head of compliance for a fintech that was sort of a high risk fintech, and then I had the banks on the other side. The regulators sat in the room and told the banks at that time to say, you cannot refuse to onboard the likes of these customers because they need a bank account. And our argument was, we are trying to fill in a market gap. We're trying to provide a service. If we don't get bank accounts to provide these services, we are audited. We've got all our policies. We can give you everything you need to satisfy your requirements. Give us a bank account, please. If you don't, these customers are going to go into the black market. They're going to do something else where they won't be traceable. It will increase criminal activity. We are trying to do something the right way, right? And the regulators backed us, and they're like, look, if you have a set of due diligence questions, they said to the banking partner, send them through. If they fail your due diligence, fair enough. If they don't have a head of compliance, if they don't have policies, you are well within your rights to decline services there. But you cannot have a blanket sort of de-risking approach to higher risk industries. So I've seen all the sort of the ugly side of being part of a high risk sort of fintech. So it's very interesting to be on the side of the journey now, where first of all, being an authorized EMI is fantastic. I think it changes the conversation towards a positive with any partner that you speak with now. So that's great. But having been on the other side, seeing the struggles of fintechs who are either still waiting to be licensed, have not quite got the resources to start that process, or who are in the licensing process, yeah, it's not an easy journey to try and serve the customers that we try and serve.
No, I bet. And you've mentioned the kind of EMI licensing that you've kind of led Incard to on a couple of occasions. So looking and turning attention to the kind of the future at Incard, what you can share, what does the kind of future look like as you aim to kind of grow and expand and scale at Incard going forward?
Very exciting. I think I'm still on the sort of train ride. Very, very, very excited. The minute we had our sort of company-wide stand up last week, and essentially the authorization has opened a lot of doors for Incard, which is awesome. So not just customer-wise, but like I said, different partners to partner up with, different landscapes, different product offerings, things like that. In terms of the future, we are headed towards Europe and further in 2026 as we grow forward. So there's a big market for the product offering that Incard has in Europe, across Europe. So we are hoping, we're basically tidying up our policies and procedures and things like that, and looking to see if it's feasible for Incard to grow and expand in those regions. From a compliance standpoint, I'm very excited because I'm already hiring another compliance person, because everyone's very happy now that we've got our license. But everyone does understand obtaining a license, and I've drilled this to the entire leadership team. It's not the end of the journey; it's just the start. Because if you think the authorization is hard, try maintaining it and making sure that when the audits come around, when the regulator asks you questions, you're prepared and you're able to say to them, we are ahead of the curve. We are being proactive rather than reactive. So yeah, a lot of work to be done now that we are licensed. Some very exciting sort of resource associated updates coming shortly. So I'm very happy about expanding my own team. And then as a business, we're looking to expand sort of globally, which will be fantastic. So yeah, that's where we're headed.
Exciting times. And wrapping up, Shannon, businesses who are navigating these kind of compliance headaches at the moment and are maybe in the mindset of they're still seeing it as a bit of a bottleneck, what would your kind of advice and words of wisdom be
I would say just simply share the responsibility. I think a lot of the times we can be our worst enemies because compliance professionals, if you talk to one, we are very detail oriented. I love my spreadsheets, for example. It's a little bit nerdy like that. Share responsibility, share information, and kind of trust people enough to give them the information and let them run. So there is a bottleneck oftentimes when compliance people are they're seen as the sole decision maker in certain areas. That doesn't have to be the case. Okay, it's a different situation where you're confirming a suspicion for a staff, for example, but you're not doing that on a daily basis 10 times a day, right? In situations where a decision needs to be made, make sure that your head of product, make sure that whoever's sitting there who is looking for new exciting ideas for the business has a base level understanding of compliance. And when they're going to look for new innovative ideas, they can say, okay, I know that I can't touch Russia right now for payments. That's very clear to me, so I won't go there. So that saves time on both parties. So just share the responsibility of compliance with everyone. You don't have to be the hero. You don't have to save the day. You just be a team player. I think that is what I will say. Be a team player. Share responsibilities. Be transparent. And do your homework. Do your homework before you go up to someone and say, no, this is absolutely no, you cannot do this. Do your homework and say, why is this person trying to do this in the first place? What do I understand about it? How can we achieve something, whether in the middle, or how can we achieve what he's wanting to do, if it's possible? So yeah, share responsibility, do your homework, and don't be a hero.